Hello everyone, welcome back to my channel. The market is a beast. Sometimes it sleeps, sometimes it roars. Right now it's roaring. The S&P 500, a key market indicator, is near record highs. Tech stocks especially are on fire. They're leading the charge, pushing the market higher. It's a bull market, fueled by optimism and easy money. But there's always a question. How long will it last? Is this a bubble about to burst, or the start of a new era? Investors are watching closely, trying to predict the future. Some are cautious, remembering past crashes. Others are all in, betting on continued growth. Nvidia, a chip maker, is at the heart of this market frenzy. Its stock has soared, driven by the AI boom. They make the chips that power AI, the technology that's changing the world. From self-driving cars to chatbots, Nvidia is everywhere, and investors are betting big on its future. This isn't just about Nvidia, it's about the future of technology. AI is transforming industries, creating new opportunities. Investors see Nvidia as a key player in this revolution, but the market is fickle. What goes up can come down. Nvidia's success is tied to the broader tech sector, which is notoriously volatile. Nvidia's earnings are the talk of the town. Analysts are expecting big things, record-breaking revenue and profits. The company is riding the AI wave, and investors are eager to see the results. Last year's numbers were impressive, but this year could be even bigger. The demand for Nvidia's chips is through the roof, driven by the insatiable hunger for AI. Nvidia is a leader in AI technology. Its chips are designed for the complex calculations that power AI applications. They're faster, more efficient, and better suited for the task than traditional chips. This gives Nvidia a significant edge in the market, attracting customers from various industries. From gaming to healthcare to finance, Nvidia's chips are everywhere. But it's not just about the chips. Nvidia also develops software and platforms that support AI development. This creates a complete ecosystem, making it easier for businesses to adopt AI solutions. Nvidia's strategy is paying off, cementing its position as a leader in the AI revolution. The question on everyone's mind is, will Nvidia's stock split? A stock split would make shares more affordable, potentially attracting more investors. It's a common tactic for companies with high-flying stocks, and Nvidia certainly fits the bill. But a stock split is just a technicality. It doesn't change the underlying value of the company. Investors are more interested in Nvidia's long-term prospects, not short-term stock maneuvers. Section 3. Beyond chipmakers. Nvidia isn't the only company worth watching. The market is a vast ecosystem, with companies operating in various sectors. Target and Lowe's, giants in the retail sector, are also reporting earnings. Their performance provides insights into consumer spending, a key driver of the economy. Strong earnings from these companies would signal consumer confidence, a positive sign for the broader market. Target, known for its trendy merchandise and affordable prices, is facing challenges from online retailers like Amazon. The competition is fierce, and Target needs to adapt to changing consumer habits. Lowe's, on the other hand, benefits from the housing market, as homeowners invest in renovations and upgrades. Their earnings reflect the state of the housing sector, a crucial part of the economy. These companies operate in different sectors, but their performance is interconnected. A strong economy benefits everyone, while a weak economy hurts everyone. Investors are looking for clues, trying to decipher the overall health of the market. Earnings reports provide valuable data, offering a glimpse into the inner workings of individual companies and the sectors they represent. The comparison between tech companies like Nvidia and retail giants like Target and Lowe's highlights the diversity of the market. Each sector has its own dynamics, driven by different factors. Understanding these nuances is crucial for investors, as it allows them to make informed decisions and diversify their portfolios. Section 4. Economic signals. The market doesn't operate in a vacuum. It's influenced by economic forces, both domestic and global. Upcoming economic reports will shed light on the state of the economy, providing clues for investors. Inflation, interest rates, and GDP growth are key indicators, closely watched by market participants. These reports can move markets, triggering both fear and greed. The Federal Reserve, America's central bank, plays a crucial role in shaping the economic landscape. Its decisions on interest rates have a ripple effect across the market, influencing borrowing costs and investment decisions. Investors are anticipating the Fed's next move, trying to predict whether it will raise, lower, or maintain current interest rates. Inflation is another major concern. Rising prices erode purchasing power, impacting consumer spending and business profitability. Investors are looking for signs that inflation is under control, as runaway inflation can destabilize the economy. The upcoming inflation report will be scrutinized for clues about the future direction of prices. The market is a complex system, influenced by a multitude of factors. Understanding these factors, from corporate earnings to economic indicators, is essential for navigating the market. Investors need to stay informed, analyze data, and make decisions based on their assessment of the risks and opportunities. The market is a game of information, and those who possess the most accurate information are most likely to succeed.